Why Bitcoin crashed from $126,000 to $80,000. In just a few weeks, $45,000 per coin was erased. Billions in leverage liquidations vanished into thin air. And you're sitting there right now tired, confused, maybe even questioning what you thought you knew about this market. But what if I told you this crash was planned? What if every wick, every headline, every crypto is dead tweet was part of the plan? Welcome to the real game.
What's going on?
The crash was the signal. November 2025. Bitcoin plunges from $126,000 to $80,000 in weeks. A 36% decline from October's all-time high above $126,000. Crypto fear and greed index hits 10. Social media is screaming, the bull market is over. The bear market is back. But here's the thing nobody's telling you. A coordinated assassination of leverage, executed by the Federal Reserve and the incoming Trump administration. Why? Because before they flood the system with trillions, they needed to shake out the weak hands. You, me, everyone is watching this right now.
That's unbelievable.
Think I'm crazy? Let's go down the rabbit hole. The hidden switch, Supplementary Leverage Ratio, aka SLR. On November 25th, the real move happened. The Federal Deposit Insurance Corporation approved the new final rules for the enhanced Supplementary Leverage Ratio. SLR is the leash on the banks. It limits how hard they can leverage their balance sheets. Before this change, even holding U.S. Treasuries was punished. Banks became defensive, lending dried up, markets suffocated. But now, that leash was cut nearly in half. $13 billion in base money just got unlocked. Banks can now 10x that into over $1.3 trillion of fresh liquidity. That's $130 billion in raw, weaponized liquidity. Let that sink in.
I think we're going to have a good night tonight.
The 5-month delay that exposed everything. This SLR proposal was written in June 2025. During COVID, it took days to approve. This time, they waited 5 full months. Ask yourself why. In those 5 months, a 43-day government shutdown hit key economic data. Regional bank failures resurfaced. Over $100 billion wiped out in a single night. Jerome Powell goes full hog. No rate cuts in December.
There were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion.
And retail crypto traders were systematically liquidated. Only after leverage was wiped out. Only after sentiment was destroyed. Only after the crowd surrendered. They flipped the liquidity switch. Not to save retail, to save the system.
It was me, and I'm very happy to do it.
Where did all the money go? It didn't vanish. It changed hands. Stablecoins are the new vacuum cleaners for money. USDT supply exploded from $153 billion to $184 billion. USDC from $60 billion to $76 billion. This money isn't gone. It's strategically channeling liquidity into AI and crypto, the key sectors that determine national strength, quietly pumping US GDP. While the average investor panics over red candles, crypto wasn't abandoned. It was temporarily sacrificed.
To do that, you have to be quite smart.
The on-chain bloodbath. Let's zoom into the blockchain. Long-term holders have been cashing out, dumping 800,000 Bitcoin in a month, the biggest distribution since January 2024. Exchange outflows fell 30%. Long-term holder dominance surged to 70%. Translation: capitulation is almost complete. The weakest hands are gone. The strongest players are repositioning, and the trap is almost set.
This is a tough hurricane.
The final wash. December shakeout. The December drop wasn't random, it was deliberate. One major factor is uncertainty surrounding the Federal Reserve's upcoming interest rate decision on December 9th to 10th. Meanwhile, China tightens crypto ban again. The People's Bank of China has coordinated with 13 government agencies to combat illegal crypto activities. Stablecoins have been flagged by Chinese officials for their potential risks, including money laundering and fraud. And then there's Japan. Japan's 2-year government bond yield has spiked to levels not seen since the financial crisis. Markets now price in an 80% chance of a Bank of Japan rate hike at the December 18th to 19th meeting. The consequences: a stronger yen, forced unwinding of yen carry trades, and a tidal wave of global asset selling pressure.
Darling, is the wind blowing today? I'd like to watch television, darling.
We're in the very last phase right now. Mid-December wicks, fakeouts, one more scare. They want the final believers to pick up their bags at the bottom. But after that, the levees break. SLR money floods in. Trump takes office. Tariffs get negotiated down. Risk-on returns are harder than anyone expects. Bitcoin isn't just going back to $100,000. It's blowing through it like it's late for something much bigger. This wasn't a crash. This was a controlled demolition of leverage. A global liquidity heist disguised as chaos. A mass emotional liquidation so the next cycle can be born in absolute despair. Exactly where every historic bull market starts. So ask yourself this. When everyone is screaming the bull market is over, will you be the exit liquidity they worked so hard to create? Or will you be the one who finally sees the game? The choice is yours. This is not financial advice. Like if you're still holding. subscribe if you refuse to be the exit liquidity, and comment I see it if you know what's really going on. See you in the next one.